This is Agriculture Today, and I'm Shelby Varner with the K-State Radio Network. K-State grain economist Dan O'Brien and the senior economist at the IGP Institute, Guy Allen, begin today's show with the grain market outlook as they share numbers and comments from the 101st Outlook Forum. They discuss the domestic and international market for corn and soybeans in their first segment. Dan and Guy continue the show and their conversation about wheat and grain sorghum. Ending today's show is Chip Redmond, K-State meteorologist with the weather forecast. He says what people can expect in the coming weeks and if he thinks we will have a wet or dry spring. That and more is coming up ahead. You're tuned in to Agriculture Today, and we start our Friday show with a grain market update from K-State grain economist Dan O'Brien and the senior economist at the IGP Institute, Guy Allen. Dan, Guy, thank you both so much for taking the time to join us today.
Thanks, Shelby.
Guy, Dan, you guys are currently at the 101st Outlook Forum in Washington, D.C., so we'll have some comments of what you've heard today integrated in today's show. But as we kick off our show, starting with just how we normally do, talking through first corn on the domestic side, Dan.
Yeah, we heard comments from USDA Chief Economist Seth Meyer, so a lot of what we'll be talking about will stem from that. And then Greg Dowd, who is the National Milk Producers contact for policy issues, basically, spoke to us this morning. And also there was a guy, the fellow from the Kansas City Federal Reserve.
Jeff Schmid from the Kansas City Federal Reserve.
Right, talking about financial issues. Now, the first thing that was talked about had to do with, well, the commodity markets, grains especially. That's what we'll focus on. They also talked about livestock. But in the corn market, there was, I guess the USDA announced their expectation that corn area would be 94 million acres this year planted. That's up from 90.6 million, so up 3.4 million. And they gave their estimates then of harvested area. They came in with a trend line yield of 181 bushels an acre, up from the ending yield of 2024, which was 179.3. However, remember that they were at 183 or so bushels per acre, 183 plus, I believe, until basically the January report when they dropped at 3.8 bushels. So the U.S. has never been over 180. I think last year at this conference, I believe we were at 183. So you take those acres and harvested numbers together at 181 bushels an acre, a projection of 15.6 billion bushels of supply. We ended up last year at 14.9 billion. So quite an increase. Of course, supply's up on all of that. And by the time you look at their presumptions about increased feed usage, ethanol holding steady, exports going down a little bit. On balance, you've got, about a 70 million bushel increase in total usage. Stocks, really surprisingly, with 15.6 billion bushels of corn projected, ending stocks are below 2 billion bushels at 1.965 billion, and stocks to use up to 12.9. Their projection of price was conservative, and really, as all of these price projections were, at $4.20. I guess I'd say overall, the USDA came across with the same type of trend line yield projection and large crop year assumptions, assuming normal weather, as they always do. The market saw this today, corn market, and closed down for March, 13.5 cents, down to 464 3/4, decent. 461 3/4. And then they went in and talked about international things. Guy?
Internationally, exports are expected to be down about 50 million bushels from
down to 2.4 billion.
And that's predominantly increased production in South America, both Brazil and Argentina, but particularly in Brazil. And look, our exports have been pretty good thus far, but that's been with the absence of China. When that Brazilian crop starts coming off next month, I'm sure that's going to add a bit of pressure on that as we see the logistics switch on that. Coming back to China, I think it's important to mention, and Seth Meyer mentioned this today, is China's seeing increased production in corn. They came from basically non-existent to being the number one corn importer in 23, 24. And one thing that's driving that increased production is their ability to adapt some improved production practices, particularly with the introduction of the GM corn varieties 2 years ago. And we're starting to see that now having an impact as they are becoming a bit more secure in their corn production particularly. And that's going to have a flow or effect not only on corn, but also on other commodities there as well. That said, from an international point of view, we are seeing global ending stocks drop down to a historic low. I think it's a 16-year low. We do have some weather situations still persisting. And corn is the one commodity that I guess I'm cautiously optimistic or most bullish on. And I think we're going to see commodities across the board. Corn's going to lead that commodity complex higher. Although we're not seeing that today, we're definitely, I think, have those undertones there. I think the other thing that came into the downside on across the commodities today was a bit more clarification on tariffs with Mexico and Canada as well as China and how they're going to be implemented. And also those comments lent some support to the U.S. dollar, which is a stronger U.S. dollar is always bearish commodity prices on that. And that sort of is precipitating across the commodities as we go, but most strongly felt, I think, in corn.
Guy, you remember he said that with regard to China, don't trust the data. Also talked about how in African swine fever, they suddenly had them and they switched over to industrial hog production more so, import a bunch of corn. Now they've come in with GMO corn of their own. So Dow did not see a lot of a positive in the long run for corn imports, but he saw an awful lot for meat imports. Comments on that internationally?
Looking back, we expected that Chinese pork industry to commercialize over the next 15, 20 years. This is from when I worked there 15 years ago. But that event of African swine fever basically made that commercialization of hog production commercialize overnight, where they banned the production of backyard hogs. Keep in mind, China has over 60%, nearly 2/3 of the world's pigs are in China. So significant shift. And that's when we saw, commercially raised hogs eat imported corn and soybean meal. And that significantly saw a shift. But yeah, China's adaptation to, and with they now planting GMO corn, their yields are going up. Their average corn yield is much the same as North Dakota, Minnesota. It's, just over 100 bushels per acre, and it has significant upside. And keep in mind, China is also the second largest producer of corn in the world. U.S. and China together make 2/3 of the world's production of corn. As far as the meat imports, most of their meat imports have been beef, as opposed to pork and poultry. Strategically, China has decided they're going to import the feed grains and the proteins and produce the livestock in country rather than import the meat itself. The biggest exception to that is beef, so that's a good thing for U.S. beef producers.
And as we're talking about commodities, what are we seeing for soybeans, Dan?
There were numbers that came out also with regard to soybean acres at 84 million acres. That'd be down from 87.1 million this year, 84 in 2025. Corn acres were up 3.4 million acres. Soybean acres projected to be down 3.1. So somewhat of a trade, not quite even as that all comes about. And also record high prices, record high yields, 52.5 bushels per acre. I think we've struggled to get over 50.7 or 51 in the past. So again, another record high yield that we haven't attained yet, but yet it fits the long-term trend. So that's what they're projecting. 4.37 billion in production. They did show a larger crush. That's consistent with what's happening for soybean oil and other products. And exports up about 40 million because of cheap prices, as we read their analysis. And total usage also up. Ending stocks do show they're projecting a decline down to 320 million. That's down about 65 from this year. Stocks to use closer down to 7.2%. And then season average farm price down at 10. So here you got another situation where the Stocks to use down appreciably, but yet being consistent with cash market and futures market prices. Right now, today, they're showing that the price would be about 10 cents lower. Guy, what do you see on the international side there?
Well, in the oilseed complex, we are seeing a global recovery in both sunflower seed, particularly out of the Black Sea area, as well as canola production. And that's going to put quite a bit more sunflower oil and canola oil, rape oil in the marketplace. Indonesia and Brazil are sort of converting their oil supplies into their biofuels program. That's palm oil for Indonesia, soybeans from Brazil. And that's lending this soybean oil price and across the complex firmer. USDA's estimate for season average price for soybeans, oil 25, 26, it's 42 cents. It's down a penny, but still fairly strong on that. As you mentioned, U.S. exports are slightly up 40 million bushels to about 1.9. Global exports, U.S. is below just 30% of that market share compared to 40% where we were a decade ago. Again, that's competing with Brazil and Argentina. However, our oil exports have remained surprisingly strong, and that's in the wake of increased domestic use for both palm oil and soybean oil in Brazil. So that oil side of things in that complex has been quite optimistic on that. On meal, I guess the one good comment that Seth Meyer made, and sort of reinforced by Greg Dowd as well, is protein demand, whether it's animal protein or vegetable protein, is expected to remain fairly strong for the foreseeable future. And that makes me a bit more optimistic we're going to be able to clear this surplus of soybean meal into the livestock sector or just into the raw protein complex itself.
We're cutting to a short break now on Agriculture Today, but when we come back, we'll once again be joined by Guy and Dan as we continue our grain market conversation. You're tuned back into Agriculture Today, and we continue our show with K-State grain economist Dan O'Brien and the senior economist at the IGP Institute, Guy Allen. Dan, Guy, as we continue talking about our different commodities, picking up on wheat, and Dan, what are we seeing domestically?
Not a lot of changes in the supply-demand balance sheet. In essence, following the early January wheat seedings and small grain and canola estimates for winter wheat yields, they projected average planted area at 47 million, up from just marginally from 46.1 last year, and production with yields at just 50.1 bushels an acre, down from 51.2 last year, a little bit lower. Production for this year at 19.26 billion. That's down from 19.71 last year. So just marginal changes. When you run through things, really supply demand balance sheet beyond that isn't changing very much. We do see with the change on the supply side, production supply side, that ending stocks projected at 826 million in the new crop marketing year, 41.2% stocks to use, up from, I guess you'd say marginally 30 million bushels from the previous year. Season average price projected to be $5.50 down a nickel. So still, I guess for us in Kansas, we're most concerned about hard red winter wheat. Not a lot of change there other than this ongoing issue of us being oversupplied and trying to compete with the rest of the world, and stocks to use for marketing year that ended at about 2 years ago, about 48%, 57 this year. And with what they showed, maybe whittling down that sum. But without exports really starting to move, there's just not a lot of impetus yet for movement. But Guy, go ahead on the international side.
Seth Meyer's comments this morning were pretty much in line with U.S. wheat exports unchanged at 850 million bushels on a continuing competitive environment. In aggregate, Argentina, Australia, and Canada are expected to be similar to last year, so no real change there. Additional recovery in European production is expected. That's after last year wheat fell to a 17-year low. And this increase in European production will offset declines, fairly significant declines in both the Ukraine and Russia. Ending stocks were raised 826 million bushels. I think you talked to that. 4% again above last year. The highest ending stocks we've seen in 5 years. That's going to weigh on wheat prices quite a bit. And I wouldn't be surprised to see wheat more aggressively price itself into the feed ration, particularly in western Kansas, Nebraska, Oklahoma, and into those cattle feedlots here, particularly first quarter of the wheat marketing year in June, July, August. So not a real pretty picture for wheat, and it's hard to get too excited about that at all.
What are we seeing for grain sorghum?
The planted area, 6 million acres, down 300,000 from last year. Yields back up to kind of a normal mode of 68.8 bushels an acre. A little higher production. Really, if there's a big change, is that they're de-emphasizing, consistent with what's happening now, de-emphasizing exports. This year, right now, they're projecting 170 million. They took the projection for next year down to 125, and then added that reduction back to food, seed, and industrial use, i.e., ethanol, and feed residual up about 35. So that type of shifting around. Ending stocks a little bit higher at 40 million bushels. Stocks to use up to 11.4%. The price down to $4 from $4.25. Guy, I think you and I were talking ahead of time, and you were commenting on the difference that's emerging between corn and sorghum prices.
Yeah, just looking at those historical spreads, and it's reflected in price. We see sorghum go to a pretty good discount with pretty cheap basis relative to corn, particularly across Kansas. And that's with that absence of the Chinese market there. There's been some sales on, but we haven't had any new sales, and those sales seem to have been pushed back and delayed. And that's really weighing on this sorghum price. We go back 3 years, 23, 24. Sorghum, the USDA season average price was a 38-cent premium to corn. Last year, it was at a 10-cent discount. And for this coming year, it's projected to be a 20-cent discount. And I wouldn't be surprised to see that quite even cheaper. And what we're doing is, without that Chinese export market there, sorghum's pricing itself into the feed rations and into the ethanol consumption there. And we're seeing that in the numbers.
What are some other general comments you guys heard while you're up at the 101st Outlook Forum?
Big emphasis on meat production, domestic feed usage being more the future than shipping grain overseas. So that was thought-provoking. A guy, I heard one comment that Dowd made in particular, that we could do a number of small trade deals all over the world, but it'd be hard-pressed to have them make up the difference in lower Chinese exports. So that was pretty telling to me.
Yeah, look, as China continues to improve its production practices across the board, not only in its row crops like corn and wheat, but also in its livestock area, particularly on pork, poultry, and dairy production. I would add into that protein complex of exports to China in their milk and dairy as well. China's a pretty big importer of dairy along with the beef. And while I think growth into China has stalled, they're still going to be a significant buyer of U.S. products potentially. But that shift in production capacity and performance is we're going to feel that in agriculture. That said, look, Mexico's our biggest corn buyer, with the Canadians in there as well as Japan. They've come on strong this year. Looking at the other comments that I sort of noted down is, look, India is going to be, I think, the opportunity, as they're the largest populous country out there. India is a hard nut to crack when it comes to trade and the way they manage their tariffs.
They're pretty protectionist, aren't they?
Very, very much so. And they use their import-export tariffs to manage their domestic price and supply. And that comes back, I think it was Greg Dowd that said, it's what we're going to have is a bunch of small advancements and wins in the trade area. The easy lifting has been done, thanks to Greg's efforts and Lighthizer there as well. And it's going to be a lot more challenge. And in this new environment, it's going to be a bit more strategic on that. So it's not going to be easy to grow that. Look, the world's still hungry for food, and particularly protein.
I'd add one thing in also before we go to Schmidt's comment that there's a lot of concern on the livestock side about screwworm coming up from South America, the need to stop that in Mexico before it gets up into the U.S. If that comes in, then you've got a lot of potential for impact on U.S. livestock herds, and the export issues are all at risk then. Guy, any thoughts on that?
Yeah, look, that animal health issue across the board, whether it's screwworm, whether it's African swine fever, more to the point, driving this egg price higher is the bird flu. Those are going to continue to persist, and just trying to get across that animal health is key. The other thing that's interesting, particularly on the meat side of things, is the impacts of tariffs. There's quite a bit of feeder cattle that actually come across the border from both Canada and Mexico. Mexico still also has an underlying GMO concern for corn that, while it's been temporarily resolved, has the potential to stick its head up again in trade negotiations. But, that demand for animal protein is out there. It's just going to be a more difficult environment to navigate. Particularly, we're going to have to adjust to a dynamic environment where you have tariffs in place, and these tariffs are likely to change quite frequently, and managing the impacts of those as one, they get those in place and adjusted, but also as they dynamically utilize those in continuing trade relations in the future.
Guy, what did you hear Schmidt talk about on the KC Fed talk about?
Jeff from the Federal Reserve was fairly interesting. He gave a bit of a historical perspective. And look, I think the Fed's doing all the right moves to get inflation under control. The one message he continued to state was monetary policy needs to be diversified. And I think, that Kansas City Federal Reserve is one of the most diversified ones as they allocate liquidity across the marketplace. He talked a bit about employment, and, the two main factors of the Fed is to manage inflation and to manage full employment. And right now it sits at 4%. Arguably, is that full employment or not? The interesting impact on particularly inflation will be fiscal spending. And one thing we've learned in the last 3 or 4 weeks is with the new administration's approach to cutting spending, that's, I think, going to have probably a bigger impact on inflationary pressures, which needed to happen as we move forward. So as they sort of try to implement those fiscal spending policies, particularly Congress needs to approve those, the House particularly, it's going to be interesting how the impact that has on inflationary pressures, because I always have felt those inflationary pressures were still there in a big way from government spending.
Dan, Guy, I appreciate you both taking the time to join us today.
Very good.
Thank you, Shelby.
Thank you.
That was the senior economist at the IGP Institute, Guy Allen, and K-State grain economist, Dan O'Brien. We're cutting to a short break now on Agriculture Today, but stick around because we have more for you up ahead. You're tuned in to Agriculture Today, and we conclude our Friday show with a weather update from K-State meteorologist Chip Redmond. Chip, thanks for joining us today.
Yeah, thanks for having me.
Chip, first wanting to talk on some big temperature changes we've seen.
We've had the wild gamut of temperatures over the last week with basically it went from feeling like winter was never going to end to spring fully sprung and almost on the cusp of summer temperatures. We had negative 20s last week, and this week we had temperatures in the 70s. We had a couple of 80s in the far southwest. But the location that wins the award for biggest temperature change is Oberlin, Kansas. They went from a negative 23 last week to a positive 76 this week. That's a 99-degree temperature swing, and it's happened before. Unfortunately, the data we have to look at that, we don't have it in as many places. So we just don't have as good of a spatial database as we have now, but that's a ridiculous temperature swing. And we went from snow to, well, now we're talking fire weather. We have windy conditions. When we had those kind of temperature changes, we have really dry air in place, which means you can really dry out the grasses that are available. They're a dead fuel and only take an hour to dry out. And so with that dry air, we're able to get the big temperature swings, but we also get the wind that goes along with it with those temperature contrasts.
Have we seen some changes with drought?
Yeah, so overall this week, no precipitation has really fallen across the state. We had some light showers that resulted in some gusty winds along the Nebraska border earlier in the week, but otherwise precip-free. We saw abnormally dry conditions expand in southwest and west Kansas, so now basically the whole outside edge of the state is now included in D0 or worse drought conditions. And then we had moderate drought expand in the southeast. And I will say moderate drought's the worst drought conditions we have now in the state. So we're drying things out slowly. Some places have gone over 100 days without a tenth of an inch of moisture in the southwest. So while northeast Kansas has been doing okay with precipitation, other parts of the state, not so much.
What are we seeing when we look into the forecast?
So the forecast has a focus of continued above normal temperatures through the weekend. We're going to keep breezy winds, and we'll eventually get some moisture in here, so we will decrease the fire threat, at least briefly, on Sunday. And then a system moves into the plains Monday and Tuesday, and right now it looks like a pretty dynamic system. The far southwest of the state will see fire weather conditions. Eastern edge of the state will see the possibility of thunderstorms, maybe even a few severe on Tuesday. And then northwest part of the state will see a chance of some snow showers. And as that system moves off to the east on Wednesday, we'll see a couple of lingering snow showers around the state with a cooler day on Wednesday. And then we open the door for the next storm system that's going to come in on Thursday and Friday. A little bit cooler air in place with highs only in the 40s. And most of the precipitation should fall as maybe a rain-snow mix. I don't see a lot of snow by any means. And then temperatures start to warm up by next weekend. When all is said and done, I think the highest confidence in wetting moisture, at least a tenth of an inch, is north of I-70 and east of US 81. So northern Kansas and eastern Kansas. But all in all, it'll probably be enough moisture just to be average for the week. So no real widespread heavy rains. Looks like those are all going to get shunted off to the east in the Ohio Valley.
Chip, are we going to have a dry spring?
I wish I could say something more positive, but unfortunately, as you look to the southwest United States, there is drought out there and it's expanding northward. In fact, that abnormally dry conditions added in western Kansas this week in the drought monitor is basically an extension of that drought already. It's working its way north and east, and it's pretty quickly. And when we look at La Nina springs, we typically see those warm, dry conditions in the southwestern U.S. expand north and east through Kansas into the early summer. So I think drought is going to be a significant player this spring. It doesn't mean we won't get rain. It just means that I think we're going to get less rain than normal. And while we have decent soil moisture in places right now, I think we're going to use that up pretty quickly once things start greening up, and drought's going to become an emerging problem late spring and into summer. It doesn't mean we won't get rain. Doesn't mean we won't get severe weather. I think eastern Kansas is going to see quite a bit of severe weather actually this year, but I think drought's going to be a problem this spring.
Chip, I appreciate you taking the time to join us today.
Yep, thanks for having me.
That was K-State meteorologist Chip Redmond. That's all we have for you this week on Agriculture Today, but we'll be back with more for you on Monday.